Now, the main event this week, and I may be a little bit biased here, but the US market is the biggest global market and it affects everything else, is going to be US inflation data. And remember, monetary policy is what drives the markets, and what drives monetary policy is jobs and inflation. So I always get these mixed up. On Tuesday, we get CPI, and on Wednesday, we get PPI. And here's the easy way that I remember, right? The C and the P, right? CPI measures inflation from the consumer side, while PPI measures inflation from the producer side. Or in simpler terms, are prices going up for the consumers or are businesses paying more behind the scenes? Once again, the market is especially focused on energy prices right now because of the geopolitical tensions, war that's happening in the Middle East, and all the stuff we already know about that has pushed inflation higher. Now, here's the big concern, right? If energy prices continue to rise, right, consumers may eventually or will eventually, hopefully eventually, start cutting back on their spending elsewhere. And that creates a tricky balancing act for the Fed, right? Inflation is still elevated, and the labor market remains stable, right? And recently, several Fed members pushed back against the idea of interest rate cuts anytime soon. Remember, we kind of started off the year before the geopolitical tensions, thinking that we would start a cutting cycle, probably 2 before the end of the year. That has gone to like maybe 1 before the end of the year, and that has gone to like probably not before the end of the year. And in fact, the Fed's tone has become noticeably more cautious and more inflation focused over their last few meetings. So this week's CPI report could have a major impact on expectations for those future interest rates, the US dollar, the stock market, and just overall risk in general.